Hello, my fellow Nigerians. What Donald Trump's second presidency means for Nigeria, Nigerian economy. The Donald Trump's returns to the White House as the 47th president of the United States, following a dramatic victory over Kamala Harris, brings new questions for Nigerian economy outlook. Trump's economic policies built around American first, prioritize domestic energy production, tariffs on imports, and pushing for low interest rates. The policies could have a significant impact on Nigerian's economy, particularly in the areas of exchange rates, capital flows, inflation, and immigration. Below is an analysis of how these shifts could affect Nigeria's economic landscape. Donald Trump's second term could have sweeping implications for Nigeria's economy. A stronger dollar, potential capital outflows from the US, and low global oil prices may add to Nigeria's exchange rate volatility, putting pressure on the Naira and increasing inflation. Immigration restrictions could reduce remittance flows, while geopolitical shifts might reduce US support for Nigeria's security and development needs. Nigeria's policymakers may need to consider alternative strategies such as fostering regional trade, increasing non-oil imports, exports, and pursuing structural reforms to counterbalance the potential challenges posed by Trump's policy. Trump's policies could lead to a stronger US dollar, particularly if his administration imposes tariffs that increases demand for domestically produced goods and services. A stronger dollar generally makes it more expensive for emerging economies like Nigeria to acquire foreign exchange, potentially strained the Central Bank of Nigeria efforts to stabilize the Naira. Nigeria's Naira has depreciated by over 45% this year, and an appreciation of the dollar could further weaken the Naira, impacting import costs, inflation, and purchasing power. A stronger dollar also increases Nigeria's debt servicing costs, as many of Nigeria's obligations are dollar-dominated. Given Nigeria's reliance on imports for fuel, raw materials, and consumer goods, additional dollar strength could heighten inflationary pressures on already high living costs. Interest rates and capital flows into Nigeria. Historically, Trump has favored a low interest rate environment, pushing the Federal Reserve to maintain loose monetary policy even during periods of economic growth. During Trump's initial presidency, the Federal Reserve raised interest rates, peaking at 2.5% in 2018 before cutting them near zero by March 2020 to counteract the economic effects of COVID-19. Trump's renewed pressure for lower interest rates could again influence the Federal Reserve's policy direction. If the Federal Reserve keeps rates low, this could, in theory, results in capital outflows from the US as investors seek higher returns in emerging markets. However, if dollar strength persists and other global markets remain volatile, investor sentiment may still favor US as a haven. From 2016 to 2020, Nigeria attracted approximately $58.1 billion in capital importation, with 2019 seeing the harvest inflow at $23 billion. This was in part due to Nigerian offering high-yielding instruments like government bonds, which attracted foreign investors, including $4.69 billion from US sources in that year. Should Trump's policies create a continued low-yield environment in the US, Nigeria could once again attract US-based capital looking for a higher returns, particularly if Nigeria maintains attractive interest rates on its debt instruments. This capital inflow could help alleviate Nigeria's foreign exchange pressures and support Naira stability. Inflation and Trump's energy policies. Trump's focus on reducing US energy costs by increasing domestic oil production and drilling on federal lands could mean sustained low global oil prices in his first term. Trump's policy and the COVID-19 pandemic led to WTI crude oil price falling sharply to around 39.17% dollar per barrel in 2020 compared to 65.20 per dollar per barrel in 2018. As Nigerian heavily relies on the oil imports for government's revenue and foreign exchange, prolonged low oil prices could impact budget stability and government spending, with knock-on effects on inflation and economic growth. Furthermore, Trump's proposed tariff on imports, including a 60% tariff on Chinese goods, would raise inflation within the US, which might trickle down to Nigeria by increasing the cost of imported goods and components, since the US is among Nigeria's top trading partners. 2.2 trillion naira in imports and 2.8 trillion naira in exports in the first half of 2024. A US-led price increase could influence Nigeria's inflation through costlier imports of essential goods like machinery, pharmaceuticals, and agricultural products. Immigration and Nigerian diaspora impact. Trump's return to office raises concerns for Nigerians regarding US immigration policy. His administration previously imposed travel restrictions on Nigeria, citing national security risks, which disrupted the movement of students, professionals, and family members. If Trump resists such policy, it could dampen the ability of Nigerians to pursue educational and work opportunities in the US. This restriction would not only impact Nigerian nationals, but could also reduce remittance flows, which are a major source of foreign exchange for Nigeria in recent years. Remittances from the Nigerian diaspora have contributed over $20 billion annually to Nigeria's economy, helping to offset FX shortages and decrease in the remittance inflows would reduce domestic consumption and place additional pressure on the Nigeria's foreign reserves, which are already under strain. Geopolitical dynamics and the U.S. aid to Nigeria. Under Trump's America's first foreign policy, military aid and development distance to African nations were deprioritized and in favor of reducing overseas commitments for Nigeria, which partners with the U.S. in counter-terrorism and security. This could imply reduced military support. Nigeria has relied on U.S. assistance to combat the Boko Boys and other insurgent groups. So any reduction in support could undermine Nigeria's regional security efforts. A decline in aid could also impact Nigeria's development projects and social programs funded by U.S. agencies with high poverty rates and a significant need for investment in health, education, and infrastructure. A reduction in aid would necessitate increased spending by the Nigerian government, potentially redirecting funds away from other critical areas. Trump's Buy American policy has often focused on reducing imports and increasing tariffs, which could impact Nigeria's trade relationship with the U.S. In the first half of 2024, Nigeria recorded a trade surplus with the U.S. with imports of 1.9 trillion naira and exports at 3.1 trillion naira. If Trump's tariff policies discourage U.S. imports from Nigeria, this would negatively affect Nigeria's export earnings, particularly for sectors like oil, materials, and agricultural products. A decrease in export to the U.S. might impact Nigeria's current account balance, further complicating its exchange rate and foreign reserve challenges. Hello, my Nigerian people. This is what is going on. In the comment section, you are free to say your opinion. Comment and tell us what you feel in this statement that I have just gone through. If Donald Trump, now that he has been elected, the impact and how it's going to be with the Nigerians, my brothers and sisters, in the comment section you are free to say your opinion. Love, share, like, subscribe to this channel. God bless Nigeria. Thanks and God bless. Amen.